And now for a preview of the Federal Reserve. The big question is what happens after the hike, when doves fly. Janet Yellen and the dove feature our cover for this decision. So a bit of background. So the Fed is expected to raise rates today, December 14th, 2016, 1 year after the previous hike. It's a very, very gradual move, as gradual as possible. It was well telegraphed many times. Remember that Yellen told us that the case is strengthening, that the case has strengthened once again. That was September, that was November, in appearances in Congress, in the rate decisions. So, and other Fed speakers also said this, so it will not be a surprise. If we move back a bit to last year, last December, I said it's the second hike in a year. Then last December, the Fed told us through the dot plot that it had a forecast, not a commitment, but a forecast to raise rates no less than 4 times in 2016, okay? But this rate hike was delayed due to a slowdown in the first quarter. Growth was very poor, just around 1% annualized. In addition, we had in the spring this kind of blip in employment, this scare that US employers were hiring less people. This has gone in the third quarter. We're back to okay growth, not too exciting, but good enough. And that's when the Fed began hinting about a rate hike. In addition, we were talking before the US elections. Here you can see a picture of President-elect Donald Trump with Janet Yellen. Well, I think it's a Photoshop thing, but anyway, that we said that Trump's election would perhaps trigger a trade war and would stop the Fed from hiking. Well, since then, markets have adopted a different narrative. Markets now think that, see the optimistic side, take the optimistic view that Donald Trump will push for fiscal stimulus, tax cuts, and infrastructure spending with the Republican Congress, and will not start a trade war. Everything's optimistic. Financial markets are calm, and when financial markets are calm, the Fed can proceed with a hike. That's the narrative. That's why the dollar has strengthened quite a lot, with more rate hikes expected in 2017. And that's the big question for this decision. Not the rate hike today, but how many times will the Fed raise rates in 2017? Are they more optimistic or more pessimistic? So today we have a big rate decision. We have not only the statement, but we have also forecasts and the press conference. So let's begin with the statement. First of all, it will announce the hike. And I think we should focus on inflation expectations. So if we look at bond markets, inflation expectations are higher, of course. Will the Fed acknowledge it? Probably yes, because that's reality. But will they talk about long-term inflation expectations as still stuck? That will be a bit bearish. Will they say that things have significantly changed? That will be more bullish. What will they say also about wages? Wages are critical because if we're getting closer to full employment, then we should see wages rising. We should see pressure in the labor market, less workers to pick from. That means employers have to pay more, okay? And we'll have to see if there were any dissenters. That'll be a bit more anecdotal. This one could be unanimous. In the past, we had two, in September, we had 3 dissenters, and in November, just 2. They were on the hawkish side. They wanted a rate hike. I don't think this time we'll have any dissenters because the hawks will be in line. Okay, that's the first part. Second part, released also at the same time, at 7 p.m. GMT. Okay, 2 hikes in the dot plot. Will we have 2 hikes in 2017? That's what the current dot plot shows. The current dot plot is from from September. It's released only once every 3 months, once every quarter, probably unchanged. The Fed will probably not like to rock the boat. But we should also look, of course, if it rises to 3, it's more bullish. It'll push the dollar higher. If it's only 1, it'll push the dollar lower. Again, the Fed is usually very cautious. They will probably not want to change, at least for the closer future, for 2017, they will not want to change the dot plot. for 2017. They might change the longer end of the range, and they might change their inflation expectations in reaction to what's going on in bond markets. That reacted, of course, to the election of Donald Trump. Also, watch out for growth and employment figures. I don't expect big changes, but remember that any small change here will be watched very closely because markets pay a lot of attention to the dot plot, and they move, even though the Fed tries to downplay this document. Okay, and the third part is Yellen's press conference at 7:30 GMT, half an hour later. What is the tone? In many cases, she keeps us asleep. She tries to smooth any kind of message in the statement. She could also strengthen the statement or reverse it. So if, let's say, the statement sounds a bit more hawkish, we could hear a bit more dovishness from Yellen, or at least some kind of smoothing. Okay, so the event is not over, even though we get the statement and the dot plot at 7 GMT. Half an hour later, we have an hour-long press conference. I don't think she'll say anything radical. She has enough experience. She knows how to dodge questions about politics, and there will be, of course, questions because that's the big issue. But of course, I expect her to have a message of data dependency. Okay, so here are three scenarios, basically. Three scenarios. Good morning, Jax. Scenario number one, being data dependent, very, very cautious. That's a high probability scenario. Wait and see for Trump. Remember that Donald Trump is still president-elect. He's not in the Oval Office quite yet. Okay, so it'll be more of a, we'll react to events as they happen. No need to change our forecasts until we know what happens. Remember that all politicians make lots of promises. Donald Trump specifically has many contradictory statements in his recent past, so we really don't know. Caution is warranted. In this case, we had the dollar rally on expectations for more rate hikes in 2017, and we could see some kind of a buy the rumor, sell the fact. Of course, if we look at the past 2 days, we've seen euro dollar strengthening, for example, but in the bigger scheme of things, the dollar has strengthened quite a bit. So I see it moving slightly lower, especially against the euro and against the yen, two currencies that have weakened quite a lot. Okay, so that's the baseline scenario, which means limited moves in general, because that's mostly priced in, that the Fed will not tell us anything groundbreaking, earth-shattering. Okay, so euro and yen, I believe, will have the biggest movements, perhaps more in the yen than the euro. Now let's talk about the other scenarios. Let's say that the Fed reacts to Trump or reacts to the bond market's reaction to Trump. That means higher inflation expectations. They could point out, they could focus, see the glass half full, talk about wages going in the right direction, which they can say because at least of October's NFP report, where it reached 2.8. I put a lower probability for that. In this case, where they're more optimistic, even push the dot plot up, we could see a wide rally in the dollar, especially against the pound and the Canadian dollar. These two currencies have had their big moves to the upside, okay, in recent weeks. The Canadian dollar because of oil, and the pound because of hopes for a soft Brexit. So this is our second scenario, an upbeat Federal Reserve. And the third scenario cannot be ruled out, is that the Fed goes dovish, because the Fed is dovish. That's how they are. Ben Bernanke, Janet Yellen, they prefer to do too much than not to do enough. They could see the glass half empty on wages. Of course, again, you can take it any way you want, because wages, for example, in the report for November slipped back to range 2.5%. And you can always find good and bad data points. They could see the glass half empty. One real thing is that the dollar strength has already tightened. Sorry for this noise. That the dollar strength has already tightened conditions. Okay, that means tougher and a tougher environment for exports and lower inflation. They could cite trade worries, international developments. They will not say directly that Trump is going to destroy relations with Mexico and China on trade, but they can talk about uncertainty about international developments. And remember that Trump wants Yellen out, and I don't know if she will try to stage a vengeance, but you never know. In this case, anyway, if the Fed is just dovish, its natural dovish self, the US dollar could fall, especially against the yen. Okay, the yen, remember, still safe haven currency, and dollar yen made a huge advance. If you look only at election night, from 101 to above 115. Last time I looked, we'll look at the charts quite closely. So this is the third scenario, cannot be ruled out. Okay, let's conclude our Fed preview. The bottom line is the Fed is going to raise rates, no surprise there, from the range of 0.25 to 0.50 to a range of 0.50 to 0.75. Big question is 2017 and onwards. They are unlikely to change predictions. That's the highest probability scenario, and this will push the dollar probably a bit lower against the euro and the yen. If they're upbeat, the US dollar could rally, especially against currencies that have rallied recently, the pound and the Canadian dollar. And if they are downbeat, dovish, see the glass half empty, the greenback could fall, especially against the safe haven yen. Okay, again, probably no change in the dot plot, 2 hikes for 2017, but watch out for the tone and hints about implementation. Remember that last time they talked about last rate hike in 2015, December 2015, they talked about 4 rate hikes, and we're going to get only one today, just as the year is about to end. Okay, that's our Federal Reserve preview. Big event today, the full shebang with the dot plot, forecasts, press conference, and of course the statement.